This conversation on market fundamentals as well. We have Devang Mehta joining in from Spark Private Wealth Management. Devang, thanks very much for joining in. Before we talk markets and the rest of the themes, since Reema was just telling us about this very interesting TCS AI survey, your own thoughts. I mean, we've heard from all the top IT companies, even all the the mid-tier IT companies at the end of the fourth quarter. And most of them, from mid-size to large size, everyone is looking at AI adoption and how they can integrate AI offerings as part of their service offerings. What's your take on IT as we know it? And if you were to buy anything right now, what will be the factors that you consider, and what sort of companies will you look at?
Thanks, Surabhi, for having me on the show. Pleasure, as always, being on CNBC. I think, yes, what we have seen is across IT, we know that there was a slowdown which was imminent in the last couple of years, that spends were not so high. And that's why I think we all went through that gradual slowdown. And now I think increasingly the commentary is becoming a bit encouraging. But yes, to answer your question on what is the future, where probably this IT services company need to go, some of them have already converted a lot of their revenues to even digital revenues, and now going forward, a lot of robotics, a lot of artificial intelligence, ERD is the way to go. So I think IT is into a transformative phase. Gone are the times when only your IT services or IT products would probably give you a greater valuation, or this business was non-competitive at that time, or less competitive is the word which I may use. But now if you probably want to either take the leading advantage or the leader's advantage, you need to gradually move yourself into such fields as AI, and most of these companies are doing it. So a lot of mid-cap companies, IT companies, just giving certain examples like Tata LXI, L&T Technology Services, all of these companies, though will be a bit volatile in terms of their numbers, but they're already increasingly getting into ERD, AI, or sort of robotics. And I think these are companies which one should look at if they're talking about new age. This company has earnings, this companies grow at a good speed in terms of even the revenues, and they have good clientele also. And I think they are also innovators in a way.
Okay, all right, got that. So that's a take on IT. Devang, let's talk markets overall now. So caught in a bit of a range as the Q4 season gets into its last leg. What do you make of things right now? I mean, the whole pre-election jitters, the fact that the market's been very range-bound. And I mean, we've stalled. There's no other way of putting it. Now, 5 months into 2024, and the great bull run has entered into a consolidation phase. Your thoughts?
Honestly, Surabhi, it's actually good for the health of the markets if I can dissect, because last 7-8 months, every month we see markets going up generally, and then a correction also starts, and we feel that the market is going through a phase of consolidation or apps or corrections that are due. I think after such a fast and furious rally, there are actually no complaints, because more or less most sectors have come to the fore. The sectors which were not doing well 2, 3, 4 years back, they've just come back with a vengeance. And with earnings, it's not that the sectors are just doing well because it's liquidity in the market, but because earnings have sort of followed the PE expansion. So my sense right now, if I give you on the markets, is that we will probably in the next couple of years, we will have 3 phases in the market. The phase that we are right now is probably we had a good PE expansion for the markets, which was preambled. It sort of pre-rallied in between. Now is a phase where you are seeing earnings growth. I think the last 2-3 years have been good for earnings growth, and I don't see any reason why the next 2-3 years will not be a good years for earnings growth. So now markets probably will grow in line with earnings growth. You have to buy companies which are going to grow at say 15, 20, 25% earnings growth, and I think your stocks can probably also compound. And the third phase will be a bit of consolidation correction that will come imminently in between. So this 2 or 3 phases, one needs to go through all these 3 phases to sort of create wealth. And that's why I think it's not an easy ride from here. But as I said, if you just be in the markets, I think that the returns to be made.
Devang, morning, and thank you for joining in. Capital goods is, continues to throw up a, fair amount of interest, and even the numbers, the order booking has been strong, but the performance largely has been fairly varied. So ABB has been strong, but L&T has missed on margins. So it's all about picking the right stocks. Which one would you recommend?
I think, yes, Reema, I've been on a lot of shows with you, and I think most of this capex-oriented themes, we have always sort of been very, very bullish over the last couple of years. So not only capex, but a lot of power ancillaries, a lot of such companies which are at the starting point when you do capex, right? So we have been bullish on those. So some names which immediately come to mind, which are a lot of portfolio businesses. I'm not recommending them, but which have given fabulous returns, and we are still bullish from here on. Something like a Hitachi Energy, which demerged from ABB, which was called an ABB Power Product, and Hitachi came and acquired the company, and now it's doing fabulously well across the stream of businesses that it operates in. A wonderful EPS growth over the next 4-5 years is estimated for this company, which is virtually market leader in a lot of segments. So Hitachi Energy being one. The second is ABB, of course, you talked about that. Siemens is another company which is a portfolio stock. And then, of course, if we drill down into engineering companies, there are companies like Pitti Engineering in the small cap space. These are companies which we have been sort of bullish because once you know that there is brownfield projects, there are greenfield projects, there is manufacturing capex, there are warehouses being set up, there is FDI being coming, there is manufacturing revolution. I think all these are companies you shouldn't ideally miss over the next couple of years.
Okay, all right, interesting. Appreciate that view. Devang, good to have you on the show as always, and we look forward to the next conversation. Well, with that, let's quickly take a break. We'll have a lot more for you lined up on the other side of the market. We'll also